สวัสดีครับพบกันอีกครั้งนะครับทุกท่านนะครับกับรายการนะครับFSSIA Exclusive Talk นะครับวันนี้ผมสุวัฒน์นะครับก็มาพบท่านอีกครั้งหลังจากที่ห่างหายไปพักหนึ่งวันนี้ขอประทานโทษนะครับว่าที่เลทไปนิดหนึ่งนะครับก็มีปัญหาทางเทคนิคเล็กน้อยนะฮะแต่ตอนนี้เรียบร้อยแล้วเรามาเริ่มกันเลยนะครับว่าวันนี้เราจะมาเจาะลึกนะครับว่าหุ้น IVL ซึ่งเป็นหุ้นที่ผมเชื่อว่านะครับน่าจะมีโอกาสที่โดดเด่นที่สุดในปี 2022 นะครับกับเรื่องของกำไรเรื่องของการเติบโตและที่สำคัญเรื่องของความแน่นอนของกำไรว่าน่าจะเติบโตได้นิวไฮนะครับ 30,000 กว่าล้านเนี่ยทำให้ PE น่าจะอยู่ระดับประมาณไม่น่าเกิน 5-6 เท่าของปีหน้าอันนี้เนี่ยมีความเป็นไปได้มากแค่ไหนเราจะมาเจาะกันวันนี้เราได้รับเกียรตินะครับจาก3ท่านนะครับแต่วันนี้ผมขออนุญาตนะครับเป็นภาษาอังกฤษเพราะว่าหลายๆท่านเนี่ยตรงมาจาก USA 2 ท่านนะครับแล้วก็มาอยู่ในประเทศไทย2ท่านอีกท่าน2ท่านนะครับดังนั้นผมอนุญาตเป็นภาษาอังกฤษนะครับ so let me shift to the English and then I will conduct this interview in English okay thank you for very much. I'll have to say thank you for the executive from the IVL team, 3 persons. Let's start with Mr.Dilip Kumar Agarwal. He's a CEO of the company. And then the second one would be the Mr. Alastair Port. He is COO of the IOD Group. He stay in the Texas, USA. And then the last one would be the Mr. Muthukumar Paramasivam. He is COO of the Integrated Pet Group. He also stay in US in North Carolina to oversee the pet group. So we're very honored to have you guys up today. So we conduct in the question series and then I will ask about the question. Let's start this first because we have a heading about the Will 2022 will be a golden year for the company IVL. So how it's going to work like that? So let's start with the IOD because this is going to be I would say the net growth driver for the IVL group. So let me ask first for the Mr. Alastair. So could you explain that what is your downstream business and how sustainability of your earning and your bargaining power against your customer in terms of the IOD group? Because a lot of investors, they still wonder what exactly the IOD group strategy and the group, let's say, dynamic in terms of the economic of the demand, supply, and the margin. So I'll give you the state for the explanation, Mr. Alastair, please.
Okay, many thanks, Suwat, and welcome everybody. Although I can't see you, I hope you're all staying safe and not too worried about the Omicron variant at this stage as it gathers speed. I know within IOD and I know within IVL, we've got a hybrid working model, as I'm sure many of you do today. And we have a mix of people working in the office and working from home and vice versa in the middle. So it's working effectively and we're managing very well within the business. So just let me explain a little bit about the IOD downstream business, and I'll try and cover the main frame of the question that was posed about how do we look at the sustainability of earnings and how do we look at our value proposition and perhaps how we look at our, I wouldn't say bargaining power, but maybe value power that we built into our products. So a little bit of an overview of the surfactants market. Good growth over the last few years, steady 3%, higher growth in China and India, and more steady growth in the more developed nations. Very much a macro trend type market. We're seeing the main growth drivers on population growth, urbanization and consumer spending power. Clearly, people want to stay clean, they want to have hygiene products, and they want to I guess move towards more sort of developed nations type white goods type products. And we've also had a bump up, as you recognize, in the heightened awareness around COVID. it was a mixed affair where a very big boost on volumes going into home and personal care as people stayed away from work, and a reduce on the I&I, so the industrial type sectors of hotels and offices, cleaning, etc. But that's clearly coming back. I think certainly if you look at my local area in Texas, hotels are pretty much full, and offices are starting to return. So that sector of the market is clearly returning. And the other area of the market that should be watched carefully is we do put surfactants into the oil field area and the fuel and lubes type areas. And with the increase in mobility and the increase in oil price, we're seeing a lot of surfactants flowing into those markets as well. What you see in the central pie chart there is what we look like as a market trend when we combine IOD current with Oxiteno new and into 2022. And as you can see, a large home and personal care market. Can you go back one slide? A large home and personal care market and a large crop solution market. So home and personal care, as I said, cleaning, detergents, personal care, cosmetics, etc. Crop solutions is spreading herbicides and insecticides on fields to keep them safe, making sure there's no overspray, and making sure the wetting agent of the active ingredient gets onto the plants. Another area that's worth tracking is fuel and lubes. We put some of our products into the fuel engine markets. That makes them very, very sticky. A lot of testing goes into these surfactants before they're allowed into any engines. And also the coatings markets, very sticky. A lot of testing goes into coatings before they're applied to either cars or houses, etc. And therefore, products are spec'd in. And clearly on the crop solutions, they're federally mandated in terms of the ingredients there. So very sticky type of products. Okay, next slide. As you can see where we sit in this whole proposition, as you know, IOD, ethane-based proposition. We buy ethane and we crack it to ethylene. We make ethylene oxide. And we also make propylene oxide. And in the surfactants market, you can add ethylene molecules and you can add propylene molecules, and you can add ethylene and propylene molecules to give as much of a diversity to the end product as you can. The other advantage that Oxiteno is bringing is they're back integrated into natural fatty acids and alcohols, which we don't, we buy them. So they're further back integrated and also further forward integrated. So they take our LAB type products and they sulfonate it. So they have a wide range of sulfonation capability, whereas we don't have today. So think about Oxiteno adding to the portfolio of similar types of technology in ethoxylation, more R&D type capability to move to the end markets, those big HPC, agrochemical, coating and resource end market. But also, whilst they're not back integrated into ethane and ethylene, they're their own EO producer in South America, and they're already forward integrated into sulfonation. So a very nice fit for us. The part we don't include in downstream is the MTBE and the ethylene glycol. And ethylene glycol, as you know, feeds to our sister plants at PET as a side integration, and MTBE goes into the fuel markets. Okay, next slide. So where do we fit on the value chain, and how do we make our money? So, as I said, raw material integration, very important. And then moving those raw materials into both high value and high volume type products through the surfactants. So you've got EO and PO type products. You've got ethanolamines, you've got LAB. Now we'll have LAS, sulfonated LAB, and we'll have ethoxylates. And the advantage we've got is we can move both into multinationals, so the big players out there, the P&Gs, Unilevers, Syngentas, and Bayers out there, and a high volume, very sticky type formulated products. And we can also move very locally into local players, the second-tier players, into locally provide good supply chain type products that many of our competitors can't do today with our geographical reach in the future. And then we have a mix of both high value, so those that are in the crop solutions and personal care, etc., and then the high volume in the home and personal home care and the I&I cleaners, those high volume detergents. So we end up in a very unique place where we can operate both on the high value, high volume, and the high volume and slightly lower value, both on a geographic and a local and an international platform now. Next question. Next. Okay. Yep. Next. And as you look at this across the Americas region, we've now combined a large player in South America with a large player in North America. And you can see our combined EO integration capability is very strong now. You can see our chemical types in terms of downstream portfolio, again, very strong. And then you can see our market reach into all of the key markets that we service right across the board, providing a very compelling offer to our downstream customers. Next slide. And think, as I mentioned, around the supply chain. So very local in North America and South America, very local in Australia and India. We have a lot of opportunity to grow in both Asia and Europe. A lot of opportunity to cement our footprint in India, but very much a strong player in the Americas at the moment. And we're seeing a lot of synergy as we look at Oxiteno, as we started the work stream evaluations, in that there's a lot of cross synergies between South and North America. There's a lot of synergies around product development, a lot of synergies around joint collaboration of innovation, and a lot of synergies around sharing customers and working with the customers and really extracting as much sticky value as we can, as we call it. Next slide. If you think about IVL as a whole, it's had a pretty aggressive downstream growth platform over the last few years. It made a very ambitious strategy to move more into downstream in the 2014 AGM. And you can see the growth it's managed to make, and it's now approaching 50% of the revenue and 50% of the EBITDA as the Oxiteno acquisition comes to fruition. Next slide. And this one tells you two stories. One is very strong EO capacity play now with Indorama, 20% of the Americas capacity. You can see our downstream play is not typical for the Americas, which is very much a lot of the other EOs in America goes into glycol, as you can see. Our play is much more of a downstream into IOD. We support our sister company, as I said, with PET with glycols. Oxiteno in the future will support our PET customers. But they've got an even bigger EOD type platform. And you can see why. If you just move to the right-hand side, the margin per ton we're making on EG versus the margin per ton we're making on downstream is quite significantly different. So in terms of our growth strategy within IOD, we'll be moving further and further towards downstream and using more and more of our integration capability. Next slide. And this really brings it home as to why Indorama like downstream type capability and being able to grow it. So if you think about the amount of volume, it's about 40% of our total volume, but it's 65% of our coma. And you can see the variability on the downstream volumes and revenue, only about an 8% variability. versus our two other plays, which is upstream, which is ethylene, 23% variability. Great year this year, but there's still variability in that molecule. And then the intermediates play, which is MTBE and glycols, and you can see large volumes, lower coma, and a lot of variability. So we see the downstream as moving forward as our, as you can say, jewel in the crown there, and I think Oxiteno will really cement our place in the Americas region.
Yeah, Suwat.
Oh, sorry. So you end your presentation?
Yes.
I didn't know that. Sorry. So let's go to the next question. So now, lots of investors wonder about the economic value added of the A10 cracker. Actually, that you probably touch upon a bit on the upstream in IOD. Could you explain the dynamics of this product in the U.S. market, and what is the status of your Lake Charles? Would that be COD very soon, and how it's going to contribute next year? Thank you.
Sure. So as you can see on the left-hand side, how important Lake Charles is to us. Without Lake Charles, we're buying an awful lot of ethylene to make our glycol. We're buying it off generally off the spot market, some contract. But it leaves us exposed to the market dynamics of the ethylene market. If you think about the ethylene market in 2021, it's been very, very dynamic, as you may have been tracking. Very wide spreads between ethane and ethylene. The few effects, I think, would be fair to say. One is a lot of polar vortex impact, where if you remember in Q1, a lot of the US petrochemical industry was shut down. In fact, most of it was shut down for a number of weeks. And then I think what you've also seen in the market is maybe a COVID overlay. People were putting off their turnarounds in 2020 during the lockdowns to try and avoid exposure of contractors on the sites. So you saw a lot of delayed turnarounds, and therefore in 2021 you've seen a gradual catch-up on those turnarounds, and a lot of outages right across the industry. You've also seen some disruption, I think, in reliability. I think with those pushing of the turnarounds and probably a lack of management and a normal system as is normal on the plants. I think you've seen some upsets in reliability generally across the industry, and therefore there's been a lack of ethylene versus the downstream demands. A lot of good downstream capacity has been coming online, so therefore you've seen very high spot prices, and therefore anybody running a cracker made good money in 2021. Unfortunately, with ourselves, the IVL cracker wasn't online. It was going through a major refit after the lightning impact it had in the 1st of August in 2020. It was significantly rebuilt and enhanced during that period. It's now back online. It started up on the 1st of November. We did some hot commissioning in October, but then took a pause to correct a few issues, and then came back online on the 1st of November, and has been running all month at about 77% OEE, about 1.9 million pounds a day. We're feeling more and more comfortable with the plant. It's you know, obviously being out for a year, people have got to learn how to operate it again, and how to feel steady and comfortable. So we've been doing a lot of training, a lot of retraining, and a lot of I would say process operator improvements to make sure everybody's comfortable. As they get settled down, we'll be looking at raising the rates on the cracker over the next number of weeks, and we'll see how it goes. And we'll be looking at moving to a higher rate position during 2022.
So when you say high rate, what exactly that would be? 85, 90%, or what exactly would be?
Yeah, I think we're going to budget because we're still doing some corrections to it. So I think we're going to budget around the 85% rates mark.
Okay.
And give us a good run at operating and settling the system down and doing some quick fixes next year. But overall, I think that's a large improvement over the last few years, as you know.
Yes, if I may add, Suwat, this is one of the very delayed project. As you know, we have been waiting for this cracker a long time, and it had its issues. But now, as we report, as Alastair mentioned, we are operating at 77%. We'll slowly ramp up. 1 month of operation is a good indication. It's very important strategy for IVL to have upstream integration. We have 2 crackers, one in Port Neches, which of course benefited this year, but this adds up another nearly 400,000 ton capacity of ethylene. So it's an upstream integration capturing the whole value chain. And as you know, this is a shale gas play, arbitrage between oil and gas, correct? And that's a very important startup. So we are very happy about that we are at the end of the tunnel, and this will certainly contribute a good portion of EBITDA coming in the next year.
So EBITDA contribution from this would be around 100 million?
Yeah, so it depends on the ethylene crack margin. Naturally, if you see, I would see it 1 year, I'm seeing a long term. Today, to build a cracker, it's so expensive in America. It costs heavily. And there is a capital discipline going on. And you will see increased crack margins coming up. So you're right, in a ballpark number of 80 to 100 million to 120. And this year, as Alastair was mentioning, we had very good crack margins also in between because of disruption. But this may happen, And 22 onwards, 23 onwards, we see capacity utilization rate of all the crackers will be high in US. And that's going to be an interesting play,
Yeah.
Okay.
Awful lot of downstream capacity built in the US. So the crackers are expected to run full.
Oh, good. So once it can be smoothly work, right? Hopefully soon. So
yeah,
then I'll
shift the team down in Lake Charles. I think they've done a great job and performing very well as a team.
Okay, thank you, Mr. Alastair. So let me shift to the third question to Mr. Agarwal. Now I'll shift to the MEG and MTBE market. How much loss that you book in this year, and then what would be the outlook for the next year and why?
So this is a very strange molecule. Let's talk MTB first, right? On the right hand side, you see the graph here. The shaded portion shows you the range in which the margin moved, correct? And what is MTB? MTB is a octane booster, right? When you go into pump and you buy premium gasoline, so it's a booster. Now you see in second quarter what happened, that butane, and third quarter you can see here, the MTB margins were very bad because butane prices were very high. Butane prices became high, which is our raw material, butane and methanol, became high because of LPG. The LPG prices were very high in Europe and everywhere. There was a shortage of LPG. Now, so third quarter, we didn't get much money out of it. And now fourth quarter, as we go, pleasantly, the margins are going back into the shaded range, So this graph is old actually, because it shows dotted line there. Now it has gone into that shaded region. So as we speak today, we are at $220 margin, which is actually should not have happened in fourth quarter because butane normally gets short in fourth quarter. But we are seeing the dynamics that butane prices have come down. The MTB prices are going up. So in 2020, actually, as you can see, the intermediates profit wasn't good. So we think that MTB will start contributing better profitability. MTB comes with propylene oxides. PO and MTB is a plant together. Propylene oxide has been doing very good. You might have seen yesterday, I was reviewing some of the businesses of big companies like Costro, for example. Polyurethane business is very, very strong today. even Huntsman, from whom we bought this business, the polyurethane business is very good. So PO is very strong demand, which is, Alastair was mentioning about the downstream propylene oxide, which goes as a raw material for polyurethane. So MTB now will kick into this margin and will have benefit. On the glycol, we didn't have great margin except for some part in the fourth quarter. Now, here we have, you must have heard about dual policy of China. And I think we talked on the investor day, the third quarter results. China is restricting the use of power for power intensive units like aluminum, steel, and they also slapped on the coal to MEG. So coal to MEG operation went down, and we basically the margins have started improving for MEG as the operating rate for coal to MEG went down. Well, MEG went up as high as 900. It's very volatile today, but because of this different factors today we see in the world, stock market reacting, oil reacting, it went down to $700. So MEG is volatile, and this year we also had this catalyst change for Clear Lake. So next year when we have more volume, then you will see. And on the left-hand side, you can see that what sort of integrated margin is there, Northeast Asia and the shale gas advantage of 205, so $480, $93, and fourth quarter 21 YTD, that's $519. I believe MEG margins will remain volatile, but I think as the world polyester demand is kicking up, because cotton is expensive and polyester is the best product, the MEG demand growth will continue to be strong. Coal to MEG in China will certainly have issues because China has put their foot down on the GHG emission. They want to achieve their targets, and you might have heard coal prices had skyrocketed, right? And China had to control the coal prices. So I think on long term we see this MEG spreads moving up and we will have our shale gas advantage kicking in. And that's why you see the intermediates, IOD is split into three: downstream, intermediates, and upstream. So let me explain. Upstream talks only about cracker, which we just talked about it. And can we go to that slide, Vikas, where we show upstream, downstream, and intermediates? You have the running slide. So basically intermediates includes MEG, MTB, where you see our profitability wasn't great because of the low margin of MEG and MTB. And downstream, as Alastair mentioned, we are very excited about downstream. Actually, it's very strong. If you go to CEPSA's results, CEPSA is a big player of LAB. LAB is very strong. Propylene oxide is strong. Verified ethylene oxide, which we are 40% market share in the world, is strong. Ethylamines is strong, as Alastair covered. So, and Oxiteno adds up to that downstream. And you might have seen the Oxiteno's results because they are published results in third quarter already. They're on a run rate of $200 million, So this is what I was talking about. In 9 months ended 21, you can see 48 million negative is intermediates. 9 months 21, the second graph. So it is contributed negative EBITDA because of very poor margin of MTB and MEG. And 9 month 20 was 54. But if you see 81 upstream, which is the cracker, because crack margins were good. And you can see quarter-wise, second quarter was 28 and third quarter is 30 million. This does not include Lake Charles, okay? This doesn't include Lake Charles. So Lake Charles just started. And Lake Charles adds 1.5 times the capacity of this. But the crack margins have come down. That's why I'm saying $80 to $100 million increase in the 22. So that went down. But you can see the downstream, 46, 77, and 101. Sequentially, how this has improved. And that's what Alastair was talking about. So we are very excited about the lighter blue part, which is the downstream. It is going to grow in 2022. The third quarter, what you see, negative 11. The MTB and MEG, which is still not at right track, should go into a better margin situation. As I just mentioned to you about fourth quarter, which is normally weak. and cracker 30 million will be added by Lake Charles. So we are very excited about the IOD. So if you, I mean, I don't want to give you numbers here, but 120 annualized 4 times 480, correct? Plus you talk about Lake Charles, 100 give and take 580, and then you add another Oxiteno. That's what I'm looking at the numbers here. You know, Alastair, don't be worried, huh?
So that number basically you assume that what's the margin of the MEG and the MTB in next year?
So this is based on the historical MEG MTB margin, but as we think the MTB margins moves up, because the MTB purpose-made MTB did not made, you know, major MTB in the world is made by purpose, you know, from methane. It's not a byproduct like we have the byproducts. So that should go up, you know, the margins. And that negative 11, which you are seeing in third quarter 21, should go into positive territory. So we are very excited about our IOD division. We have a unique position in the United States in a shale gas advantage, barring crude oil. If crude oil collapses to $40 a barrel, then naturally that advantage goes away. But that won't affect the needle on downstream, you know. It only affects our intermediates and upstream business. I hope you got that.
Yeah, and Mr. Agarwal, maybe I'll take here maybe a bit question about what would be the impact of the Omicron that you think would be on your businesses as a whole?
Having tested the resiliency of PET business, I mean, we in 2020 beginning, we were scratching our head with Mr. Lohia and all of our board members. And says, what this coronavirus will bring. We were working from home. The beauty of this pandemic, I mean, people were working from home, has changed the landscape, the way PET is consumed. The PET has grown. I don't know whether you know, in thermoforming in China, the PET demand, which goes into the food packaging and all that, grew by 18 to 20%. So people started ordering at home. People were, you know, the carry bottles, large bottles, go to the home, and even on-go. When we say on-go sales means when you go to the airport and pick up a bottle, that demand went down actually because nobody was going to the stations. That demand went down. But in spite of that, the PET growth was good. Now, if omnivirus, if this comes, naturally it checked the word on Friday when the Dow Jones went down, the crude oil went down, but we had again a recovery on Monday. I think even if it happens, it should not evade vaccination. It is too early to talk about it. WHO has given a guideline that this can be a very transmissible product. But I think people are well vaccinated in different parts of the world. Presently, I'm in India. India is doing fantastic. I mean, India, number of cases are only 8,000 cases, and so many people have been vaccinated. In America, we have 50%. So I think still our product resiliency will remain strong, particularly PET. People will go back into the hygiene where surfactant demands. You know, our hygiene business did not do well because, you know, when the people were using way more wipes and face masks, naturally we've got the benefit in 2020. So I'm not worried having the experience of COVID that our business will get affected in because we are, you know, serving the daily use products. So I don't see that happening. If I was in luxury goods, I would be worried. And I'm in luxury goods.
Okay. So now let's shift to another group of the product, very important. This one, a lot of investors believe that this is the most important group of the company, which I don't know is true or not, but let's say it's a integrated PET or combined PET that you call. Let ask to Mr. Let me call it Mr. Muthu. Is that okay?
Muthu, that's perfect. Yeah.
Okay. A lot of people don't understand why the difference of the margin between North America, Europe, and Asia for the product. So what exactly the market structure and the competitive landscape, particularly in the America and the emerging market, and what exactly the unique cost structure that apply to I mean between the continents, say that way. So what made the difference of that? Can please explain to us? Thank you.
Sure. Thank you, Suwat. Appreciate the question. Just as a very quick intro about myself, I've been now with IVL for 23 years, 8 of which I spent in Bangkok in our headquarters, and for the past 15 years here in US, and currently responsible for our combined PET business in the Americas. So now going into your question, I wanted to give a little bit of highlight on our combined PET that you talked about. As you can see in this slide, the middle section of this slide, PET as a product category continues to remain as a preferred material for packaging. Of course, due to its 100% recyclability, you can see that it has got a lower carbon footprint and also low cost per serving versus other formats, aluminum and glass. And then in addition, it has got other important benefits on convenience and hygiene. And Alastair mentioned about this, Kundike also talked about this. The spread of COVID-19 actually has resulted in increased consumer awareness and attention, towards hygiene, personal care, and also home care. This has helped further to highlight the benefits of PET as a category and helping further increase in the growth of demand for PET. And the other thing that we talked about, the China's dual control policy on energy, this is also further enhancing the cost benefit that PET offers as a category over aluminum. So there are several positives that is further added to PET's benefit over other categories. And in this space today for IVL, you will see that we are a leading PET producer and globally and having 20% or more market share. And in addition to this, we are also the leading recycler of PET. And over the years, we have now built a resilient model of combined PET, serving our customers with a range of products anywhere from PTA to PET to rPET to also packaging as downstream. And through acquisitions, brownfield and greenfield projects, now we have a truly global footprint with this 60 manufacturing sites across 22 countries. And we are also making sure that our cost structure is continuously improved through operational excellence, debottlenecking in different assets, and with our integration to be in the top quartile cost position. In addition, we are now continuously working on maximizing stakeholder prosperity through our efforts to strengthen and solidify our leadership position in recycled PET, further expanding our presence into HVA markets. And of course, we have talked about our Project Olympus, so continuous cost excellence through this project. So that is somewhat on the combined PET segment. And if we go to the next slide, please. So here, this gives you a view of the market structure and the competitive landscape, Suwat, that you asked. So the focus is here more on the Western markets here. So what you can see here is that the key aspects of Americas and European Union, including Turkey, the PET capacities in these two regions together account for about 1/3 of the total global capacity of PET. And in case of PTA, these two regions together account for about 10% of the global capacity. But as you know that this lot of the PTA also goes into polyester textile, almost 70% goes into that, and 30% goes into packaging PET applications. One thing that you will note here is that in both these regions, the market, PET and PTA market, are consolidated. unlike in Asia where it is fragmented. And the other important thing to note here is that both the regions have a large deficit of PET. You can see the gap between the demand and the local capacity, which is being served by these imports. So what this does is to ensure high operating rates for the domestic producers in these regions. And the other thing that I would like to point out here is also that there's no additional capacity being built in either of these two regions, and also both in PET and PTA for the next few years. So all this gives IVL a good level of strength in this. And you will see here from the pie charts to the right, you see that IVL is having number 1 or number 2 positions in these regions. And we also have a high level of feedstock integration, PT integration, you can see. So we are able to fully benefit from the dynamics, the regional dynamics. And having this large local production also enables us to provide a very reliable supply chain and business continuity solution to our customers as compared to the imports. And we all know that with the pandemic related supply chain challenges in global trade, there is a strong preference to source as close to home markets as possible. This is clearly emerging. So thus the strength in demand, the low pipeline inventories, and the supply chain related challenges on imports, all these are providing strong tailwinds for the large local production we have in these Western markets. And that is more on the market structure. And then going into the, you talked about the spreads, let us say, spreads in the Western versus Asia. So generally, we have higher spreads in the West as compared to Asia. Now, of course, there are several reasons why that is happening. First of all, we saw here that the industry is not fragmented, as in the case of Asia. And then if you see the overall supply chain cost to serve the customers through imports is high. And we saw that these are deficit markets. So there's a lot of imports coming in. So higher the cost of imports and the import parity, that is helping the domestic producers and improve the spreads and having higher spreads than Asia. And this is especially now with the significant escalation in the ocean freight rates we have seen since last year. That has really given a lot of benefit to local production. The other thing would be that the geographical size of the market, you take the case of US, for example, such a large geography. And if you have to bring in imports and move it into interior places, it's going to cost a lot more than serving from the domestic. So that further adds to the cost. But when you are serving from domestic, then you get advantage of that. And even the handling infrastructure at many customer places in US, they are more geared towards domestic supply modes rather than the import modes. Most of it is served by rail or bulk truck, whereas if you bring imports in bags, then you are going to spend additional cost in transferring to these modes. So all these help the domestic producers. Then another important aspect would be the trade measures that are in place, whether it is the general import duty in many of these markets or the anti-dumping duties that are in place in some of these key markets like US and Brazil. They ensure that the imports, whatever they are happening, they are priced in a fair manner and no dumping occurs. This again helps the spreads in these markets. So then to talk about, if you see, we talked about the long supply chain and the cost, and this supply chain also is susceptible to a lot of delays. Longer it is, the more chances of delay. Whereas when you are serving from domestic, then you are able to provide a more reliable solution. And that enables the producers to charge a premium over import parity, which again directly enhances the spreads. Now, there is more and more talk about reshoring, right? Taking sourcing close to the home and bringing back production back to the home countries. So this reshoring certainly helps with IVL strategy of regional feedstock integrated footprint and proximity to customers. So we are fully able to benefit from this. And just to close, there is we also the need for higher spreads in the West. They are also necessitated due to higher working capital requirements in these markets relative to Asia and the high reinvestment capex that is there. So basically, these are, this will give you a feel of how we are able to maintain higher spreads in the Western markets as compared to Asia. Hope that answers the question, Kunsuwat.
Let me add, Kunsuwat, we are integrated. This is unique, right? We have our own PTA. We have our own both sides. The paraxylene cost in America and paraxylene cost in what raw material we buy is same as Asia. But our selling price is determined from Asia price plus freight plus import duty plus inland handling charge, correct? So now you can see the difference. That what builds the Western pricing versus Asia. And very important point which Muthu put in is reinvestment cost to build a plant is 6 times in America or Europe as compared to Asia. Why? Because labor cost is high. Every construction cost is high. And Corpus Christi. Corpus Christi is still the cost of building the plant is so high. So there is to create that return on the investment in Europe and America, you need different spreads, not Asia. The Chinese capital cost is low. Now, it's important to know that we could not unlock that value in 21 fully because we entered into the contract in 2020 for 21, correct? And as now Muthu and Kumar are negotiating for 22, now they are able to get better pricing for 22, for 21 when they're negotiating the contract. Because now customers wants reliability of supply and we will be able to unlock, and that would get reflected in the 22 earning versus 21 earning. So your first question was, are these spreads, why they are high? So as I explained to you, paraxylene cost is same in all the 3 places. If I was not integrated with PTA, my story will be a little bit different, because the PTA pricing, PTA margins in Europe are high now, going to be high. In America, is recently we increased 4 cents per pound or $88 per ton, which is effective from 1st January, right? And if you produce 1.5 million ton multiplied by 88 is $132 million only on PTA margin. So that will start reflecting, kicking in the next year. So that is how this deficit market in America, you can see here, the PET import is 1.2 million tons, right? Which is actually 25% of the demand of Americas. That's a big import, we're talking. And Europe, we are talking about another 1.2 million. That's how this pricing power, you can say, becomes in these 2 continents to unleash the value, which you will see in 2022 earning. More because of the contracts not settled yet.
So around let's say 2.4.5 million tons of the PET will be getting a new contract price, right? Which is higher year on year.
And PTA, and you're missing PTA.
Oh, PTA, yeah. Okay. So what would be the total volume of the PET and PTA together?
So you are
under
asking
the
me
new
now
contracts?
the forecast for the 2022 indirectly.
Yeah. Yes, that's correct.
So you will be give you a ballpark number, $88 into, as I said, 1.5 million ton becomes $132 million. coming from US PTA margin only, right? And then Europe, if I'm making 1.5 million ton again, about nearly 1.4 million, I'm talking of 140 million. So this is again only from PTA, and then on top of it, PET. But yes, we also have a spot business which we benefited this year, right? There's 2.4 million tons, which is contract, the remaining was the spot. So I don't know, spot today, as I'm entering into the market, fourth quarter, China is supposed to be the lowest PET margin. But today, integrated PET spread in China is the highest for this year in the fourth quarter. Very surprising. Because why it is happening? Because China dual policy there's no inventory of PET. The pipeline is tight. Europe, there is no inventory. America, there is no inventory. Brazil, we had a fire, which we just started the plant. So there is no inventory. So you're going into a new year with very low inventory. Of course, Chinese are trying to export more quantity. You will be surprised that China this year will be exporting 3.2 million tons, in spite of all the logistic challenges which they have. And we are actually struggling to allocate the contracts for next year to which customer we give the quantity, because the demand is so strong. So that will all get reflected in 22 earning.
Okay.
Maybe at the end we may give you some ideas where it will be.
Okay, Mr. Muthu, you have any more, comment on that? Or maybe we can go to other question.
Yeah, I think I fully agree with Kundi K, because so one of the things he mentioned about the PTA, right? Now, of course, you may say that we have a high level of integration, so a lot of this PTA is captive, but then that directly gets passed on to the customers through PET. So, we are getting that benefit on the entire PTA. Even though a lot of it is captive, we are still getting the full benefit of it.
I see.
So,
but let's say the benefit of the PTA normally, I would say normally would be lower than the PET, right? Is that sense? It's almost the same.
It is because, in case of PET, one is that if you take the entire Americas into account, then the volume is also larger as compared to PTA. And then the second thing is that we talked about this various cost that is being incurred. So that also is more in case of PET. So the benefit is also more, whether it is the duty and then anti-dumping and then the logistic cost, all that together, then it matters more for the PET. So the benefit will be more.
So PET actually is more like a more winning products to you, right? Because of the I would say undersupply situation in the US and the EU as well, and you said about the import duty or something higher than the PTA.
Altogether, yes, import duty as well as anti-dumping duties. So various trade measures together, yes. For us, it is also important to look at the integrated margin as well. So the good thing here is that sometimes what happens is that, on PET, then if the margin spreads out better, but then if it is not good in the upstream. But here, when we are looking at both PTA and PET, both are the spreads are increasing, which is even better, right? So the integrated basis, it gets cumulative benefit is even more.
Okay. So the current contribution of the combined PET would be around 2/3 of the EBITDA. Would that correct? And before the Oxidano?
Kundike, you want to?
Yeah. So Vikas, you want to show that? Maybe.
Slide.
And then what it looked like, say, after the Oxidano acquisitions, and strategically how you position the combined PET against other product, particularly the IOD.
Yeah. So combined PET will remain a very strong business even going forward because of large volume. We talk 5.8 million ton PET, 4.6 million ton PTA, right? Which is the which is quite strong. So when you look at this, I don't want to give you a, you see the blanks here, right? We'll give you, we did core EBITDA 1.7 to 1.8 forecast. If we just do, we did 1.5, correct? Reported, right? And fourth quarter, if we go into the range of 1.7 to 1.8 core, but reported was 2 to 2.1. Why reported was higher? Because we got the inventory gain, right? Of $200-300 million, right? Now, what will be the drivers of the next year's 2022 earning? Let's talk combined PET. Demand is good. We did have some loss of production in Brazil and in Egypt because of the supply chain disturbance of PTA. I think that will get normalized. We also had China plant which was down for turnaround and raw material normalizes. So combined PET in the green portion is the volume, which is the volume growth, correct? Because of the better volume. And then you have IOD, which we talked about, Lake Charles. We talked about the Clear Lake, we put new catalyst. So the MEG production has improved. Polar Vortex impact, which we have first quarter. And Lake Charles, I think they have not written here, Lake Charles, right? So that is a kicker for IOD in volume. Fibers also, we have better demand in lifestyle, and you will be surprised because again, the pipeline is empty, and this China dual policy is also impacting the polyester production in China, who is the largest clothier of the world, right? And we are seeing in India very good demand, and that will also get into better volume in the fibers because we had no COVID impact. Hopefully, no COVID impact. It's too early for me to tell you that whether this spread will be there, but as the countries are well vaccinated, even if this omnivirus comes in, unless it evades, I think the main street opens up and then we have better demand. And the semiconductor, which is impacting mobility side, should have a positive impact. Coma in combined PET, you see a big green there, right? Big green. Why big green? Because we are talking of PTA West margin. I talked to you, $88 multiplied by 1.5, 132 million. Asia, I'm not saying that Asia PTA margins will go up. So forget about Asia. We have no improvement in Asia, right? Because China is building the capacity. China is a huge player. I have no improvement in Chinese PTA margin. The remaining comes in Europe because Europe PTA margins will also improve. Then we have PT margin on Western. I'm not taking Asia increases, okay? Although the Asia today indicates very good increase, but we are not considering that. We think it is momentarily. Maybe China will roll back their dual China policy, but it's still Western will give me a good grip of combined PET. And you can see the green, if you add, then naturally combined PET will be the star again for 22. In IOD, we talked about the product mix, we talked about the downstream, so that will give, and fiber again, we had a lag loss of $36 million in hygiene for polypropylene, which now polypropylene prices have come down by $300 per ton. So we will start recovering that. We have more production coming and the insurance claim income coming. Similarly, in IOD also, we have 2 insurance claims which are not settled yet, which will get come in. And yes, the fixed cost, there will be, and then new projects which we are talking is Gemini, which is just completed in Covington in America. That will kick into the fiber. We have recycling because so far we have invested heavily in recycling, but our ROCE is not that great. Next year, we are well committed. The new technology of NGR. So all we are actually expanding recycling plants. So that will kick in a lot of better profitability, as you can see that green in combined PET in recycling. And then Oxiteno for 9 months. I'm assuming 9 months, okay? And Oxiteno is doing great. Remember, Brazil has elections next year. The market is quite volatile. The currency is volatile. So IOD Oxiteno, if I take a run rate of 200 million, 192, 200 million, that's what they have been achieving. Even if the present currency situation remains and whatever it is, then this is the 22. I can't give you the exact number, but you can assume that what will be the growth, and that's why where we are going in 22, right? So I'm not showing any negatives here. Now you may ask me, Kundike, what can be the negative, right? And you asked me about the Omicron virus. Are we worried about the volume? I'm not worried about the volume in PET, because today when I book my customer order, I'm thinking how to bring more product to the customer. In Europe, I'm running 200,000 ton short. Muthu is running short on the product. He says, can I get material from Spain? Can I get material from elsewhere in the world? I want to serve my customers. So contracts, people are saying, give me material, talk price later. We can talk price later, right? So that is the situation where, and here I will like your, investors or the people who are on the line to differentiate between polyethylene and polypropylene. Don't lump IVL into other polymer group companies, because they are having effect, like they had peak of earning, polyethylene, polypropylene had a peak of earning. We are not at the peak of the earning, that we have different dynamics of our business. PET has a different dynamics. So you say unique, you won't find comparables in the world that where we are, and that's why the PET demand is strong. There's no substitute. Not capacities are not coming in Europe and America. What is the PET plant getting built outside China? Is only Corpus Christi. Vietnam built 2 plants that have been completed. So next 3 years, no capacity coming, and the demand is so good. So that's where these 3 business vertical are quite resilient, and we think we are not so worried about it. Today, car production is going down because of semiconductor shortage. It's not the demand of the car is down. Actually, second-hand cars you can sell better price today because there is no availability of cars in America. So I think this gives you a good idea where IVL is heading, and your main title is where the 2022 will be. Hopefully this answers you the questions. Yeah.
Maybe we could touch upon about the recycling that you mentioned previously. How that's gonna be, say, you actually you have a target about 750,000, right?
Yeah.
And then what's the progress? And then I would say comparatively, how you compare the strategic value and the economic value between the virgin and the recycling, and then the strategy you achieve at 750,000. That would be, I would say, soon to less a bit, maybe to 1 million, or do you still stick with the 750? Maybe I'm not sure which one to be answered. Maybe Muthu, or maybe you don't be talk about.
Yeah.
Sure. That's a very good question, Khunsuwat. And we realize, as Muthu was presenting, the beauty of this polymer. This polymer is recyclable. This is much different than high density polyethylene, polystyrene, which is not recyclable, right? That this product recycled, but whenever this was collected, is going more in fibers today. It goes, bottle gets collected, goes into fiber. Like in Thailand, we don't allow bottle to bottle, right? We're still working with the government of Thailand. That Europe allows, why Thailand doesn't allow? So I think we will soon get the approval. In India, they don't allow. And 80% of the bottles which get collected goes into fiber, particularly in India. So assuming 1.2 million ton, 1 million ton. So we realized this, and we went into the journey of acquisition identical to our PET business, that acquire the companies, expand them, make them competitive, and convert into a scale. And that's what we did. Today in America, I will be 30% buyer of the bottles, the way we acquired the companies, and we are consolidating it. So you can see that 330 KT is already the capacity. And you're right, 150 is the project in pipeline, which makes 480. And you're very right, 750 will run short. Because the brand owner's commitment is even 30%. And if I say, in Asia, it will take time, but eventually, should I have 1.2 million tons, 1.5 million tons? Probably yes, maybe after 2025. But right now, our focus is 750. The question comes whether brand owners are willing to give the premium over virgin when even the virgin is high. And on the right-hand side, you can see that slide which shows that how much is the difference of the green line shows the Europe premium, North America premium, and Asia. And why brand owners are willing to give premium? Because this is the best polymer to serve their customers. You know what a brand owner looks, Coke, Pepsi, okay, 1 liter of drink, how can I serve cost effectively to my end customer in the retail market? So PET stands out, and then CO2 footprint is low, as Muthu was covering. So people are willing to give the premium. We will continue to expand this. This will be area of focus. Having said that, we do have challenges here. I don't say that we don't have challenges. In US, unfortunately, the collection rate is 25%. Now we are saying, how can we increase it to 35%? It is unfortunate, or 40%, because it goes into garbage. If you go into US, these people don't have a good collection system. And that's what we are working with brand owners, with converters, how to create an important collection rate. In Europe, like it is 54% collection rate because there is a deposit scheme. So in Germany, 90% collected because when you return the bottle, you get 25 euro cents back, which you pay at the time of buying. So different models will get developed, collection rates will improve, and this will certainly help in developing recycling. And this particularly shows you that why this PET will be I think people are focusing on climate today, right? You just saw the Glasgow, the summit.
COP26. COP26.
Yeah. And so they are talking of sustainable packaging, and PET will stand out as a sustainable packaging. And government legislation for GHG reduction and bad. I think our challenge is how do we collect more, particularly in US and Europe. It's not a problem in Asia. And leading brand owners have commitment on the right-hand side. You can say Coke has committed that they want by 50% content by 2030. Pepsi, 25% by 2025. Nestle, 35%. We are also working on chemical recycling solutions. So all this is recycling itself is a very important vertical within combined PET and will create good return and will differentiate us against our competitors. So that's the journey. You're absolutely right. It's an opportunity for us to grow the business.
Okay. And maybe just one thing, Kunsawar, to add to what Kundike said is that we have been sort of taking on pioneering efforts in this space on recycling. Now, this is being fully recognized by the leading brand owners and our customers, whether you talk about Pepsi Cola or Coca-Cola. And that, in turn, is ensuring that we are able to work collaboratively with not only the brand owners, but also the other value chain partners, in increasing collection and then recycling. So you would be aware that we are now in the process of setting up a recycling facility in Philippines jointly with Coca-Cola. And we have similar ongoing discussions in the areas of collection and recycling. So all this will not only give a lot of strength to IVL, but also it helps the entire industry, to grow the PET category in the long term. So that is why we are so bullish on the growth in demand for PET.
So let's say if you compare with your global peers in terms of the ESG or the recycling, how you progress yourself, your company, ahead or on par or a bit behind, how you position your company in that term?
Yeah, so in terms of today, if you see whether it is, our sustainability strategy is on all the fronts, right? It is an ESG. Recycling is one part of it, but whether it is environmental, social, or governance, so everything we are focusing, we have a comprehensive ESG strategy agenda. And now talking specifically about recycling, so today we have talked about 750,000 tons by 2025. Now, if you see the second largest PET producer, which is Alpec, for the same period, their target is 300,000 tons. So even as a percentage of their total capacity, if you see, it is, we are still somewhat ahead. So the other important factor to see is it is not only the capacity, but also the versatility of the solutions that we are giving to our customers. So we have been leading, in addition to the mechanical recycling, which is a lot more prevalent, we have been leading the efforts on, if you're familiar with the single pellet solution, where the recycled content is on the backbone of the resin. It offers additional benefits to the customers in terms of handling, ease of handling, and product performance. So IVL has been leading those efforts in different markets. And then, like DK said, we are also closely engaged with value chain partners on developing the enhanced recycling, right? That itself has several other advantages as well. So by engaging fully in these different areas, I mentioned about the recognition that we are getting from our customers. So that is keeping, even within the recycling space, it is keeping IVL at the forefront.
Okay.
And the sustainability, we have formed the Sustainability Center of Excellence, led by our Chief Sustainability Officer, Yash Lohia. And you can see that several initiatives are being launched now with this help of the COE. Thank you.
Yeah, thank you. So maybe I'll shift a bit to Mr. Alastair, because in the past 1 year, it seemed that a lot of I would say mishaps or something happened to your IOD, right, group. You think that in the next year, what would be something that could go wrong about your business, or under the current situation of the US, say high inflation and things like that, how you see the prospect of your IOD group?
Sure. Yeah. Thanks for the question. So, well, rather than look at the headwinds first, let's look at the tailwinds. So as DK mentioned, quite a few tailwinds behind us. We've got the cracker back online now, to be a major tailwind to us. We still see, whilst we might not have a COVID spike of demand, we still see good demand. We are in a strong position with our customers to maintain good volumes. We know some of our product lines are in very high demand versus supply capability, so we've been managed to increase margins there. And I think the trading range for oil is looking good. I think OPEC would like to keep the oil price up, it looks like, until they're sold out. So that should be trading higher than it has this year. We're learning to be more agile with raw material variability. We're doing a lot of work in the background around trading, asset-backed trading, and being more agile in the purchasing side. So I think that's going to be a tailwind. And I think just generally the world has moved on, and it's, as DK said, there's a higher demand for our products, and it's continuing. People live a slightly different lifestyle than they did before, and they're more hygienic, and they're more schwa, and they use more single PET type plastics and things like that. So I think the world's moved on a little bit to where it was even just a couple of years ago. I think headwinds that you could probably think about, gas price, we're watching that very carefully. It's historically high in Europe, as you know, and in Asia, because of some of the factors that DK mentioned. It's forecast to come back down, but whether it gets all the way down from historic lows that we've seen over the last couple of years in 2022. So I think it'll be slightly elevated by the end of the year, but certainly elevated in Q1, Q2. We've got the Federal Reserve with quantitative easing ending. People have been forced back to work, which is a good sign. But we've got to be very careful of inflationary pressures. There's a high demand for people in the marketplace, as you've probably seen in Asia as well, and inflationary pressures are certainly there in terms of wage expectations. So those are the headwinds I think we should monitor collectively. As DK mentioned around ethylene spreads, I think it's going to return to some historical spreads rather than the highs we saw in 2021. MTBE, I think will return. I think we're already seeing good MTBE pricing that's close to historical pricing. I think we've seen certainly higher raw material pricing that we haven't seen before, but that's starting to slowly drop as gas prices start dropping and supply demand forces start normalizing. So whilst it's not back in the range of where it should be, it's going to be back in the range. It's going to get back there. So there's a few areas to watch. For our downstream market, we've got quite a good formula-based strategies on a lot of our downstream products, which is why you see good stability on the margins. We're about 50-50 on some products between market and formula, and 60-40 on others between formula and market. So, you know, we have exposure to the market, which is good when there's lack of supply versus demand. We've also got some good baked-in formula pricing that track raw materials. So overall, I think we're in a good position. Obviously, we can't forecast a polar vortex or something like that happening, but hopefully that's a 1 in 20 year event, and we shouldn't see that one again. And I think the market's looking good at the moment, personally.
So in Houston now, it's not. No, in Texas now, it's not getting cold now, too cold. So well, it's going to be another polar vortex.
I think when you saw cold, it was very cold. It was a polar. You know, we to give you an example, we had heat tracing at 120 degrees to keep things hot, and it still froze. You know, it was just crazy weather, and never seen anything like it. So hopefully not again.
It's amazing, right? You see more snows, right, in Texas.
A little bit of fog and a little bit of ice normally, but nothing like this.
Yeah. Okay. So probably we come to the end of our presentation. Maybe I'll give Mr. Agarwal maybe to probably to talk with the investor what you think about the overall picture of the company and next year. And then I'm sure that, let's say in my view first, I think that next year the IVL will see probably a diamond year, maybe a golden year, what you call, because IoT would be a big jump, right? And combined PET would be, I would say, a big pillar of the company, right, next year. And Mr. Alastair, you also will oversee the Oxides, right? Under your umbrella?
Exactly, yes. So we should be closing in Q1, and as DK indicated, what the historical earnings look like, and we'll get a good proportion of those months of historical earnings. It is election year, but demand for their products has been high over the last couple of years as well, just as we've seen as well. And I think we'll start seeing some synergies coming in between the two companies. We've got two two big companies coming together, and you always find good improvements there. And I think we can unlock an awful lot fairly quickly in 22 and 23.
You know, maybe before I give the state to final word for Mr. Agarwal, one question that it triggered me, and that a lot of investors now increasingly compare IVL with Danaher, right? Because Danaher is the king of acquisitions, right? And actually, they have a what's it called, DBS, right? Danaher something,
DBS,
something like, I remember what they call DBS, right? To integrate, to use the Kaizen, right? Something like that, right? To improve the operation, something like that. How that compare to IVL, Mr. Agarwal? Maybe you probably do.
Yeah, so good question, Suwat. Our journey of last 28 years, when I've been with IVL, we acquired so many companies around the world, right? Of different cultures, we integrated them. The big focus has been retain the market, retain the colleagues who come with, the associates, as we come with acquisition. And they are leading our business, as Alastair just came with the acquisition and he's leading the business. And you rightly asked Oxides, right? Similarly, this was very important for us. When you talk of Danaher Business System, we are actually, Danaher is also built with acquisitions, and we are on that journey. This company rapidly grew, as you have been watching this company since Indorama Polymer listed, delisted, IVL listed, and kept acquiring the companies, taking bold steps to acquire big acquisitions of $2 billion and now $1.3 billion. It's a big bets which we play. But we are confident of our people, we are confident of our systems, but we are improving our systems. You're right. The 2-3 major drivers which we have changed. One is Olympus program. We didn't talk much about it. That we want, these are legacies assets. So it was very important to put them in right track, right cost structure, taking cross synergies, and that 600 million unlocking value is on track by 2023. The second, we said, how do we standardize the processes like DBS? And that's where again SAP HANA 4, which was the largest rollout by any company in the world. And SAP is very proud about it when we did the release one. This is a 3-year project. And the leadership development, because we did a lot of changes you saw about organizational changes, which we did, taking the responsibility of all the businesses. Sanjay is also going to get into our combined pet businesses. Now, these are all part of the process leadership development and the talent development, which we are doing, because IVL is a growth company. Today, it's a $15 million company. Tomorrow, we want to be much bigger company than this. And we have to keep evolving and create a succession planning. So today, if we summarize, in 22, as you rightly summarized, whether you call diamond year or platinum year or whichever year you will call it, we have to de-link with other petrochemical companies. Unfortunately, we get tagged with that other petrochemical companies, but our dynamics are different. Our 3 business segments are very strong poised for growth, very strong poised for growth. I repeat again, particularly my IOD business, because in IOD business, we see, it's a fantastic, if you have an opportunity to visit Port Neches, it's a place where we can build polypropylene, we can build ethylene carbonate for batteries, we can do further, cross synergy benefits of Oxygen. We go into polyurethane business, and there are a lot of businesses for sale coming up. So IVL is well positioned. Our leverage, people were speculating whether we'll go for a increase in the share capital or the right issue. I think that has put on rest with our performance. The operating cash flows will serve our acquisition. So we are well positioned for further growth post 22 as we deleverage rapidly, with our operating cash flows. And that would be the game. The discipline, capital discipline will be very important. Making the return on the investment, and keep improving the quality of earning which we are focused, and then go for next phase of the growth, And as you rightly put, ESG focus will be very important. The world will be different than what we are sitting today. The young millennials are going to buy the products which will keep the future generation safe, and the carbon neutrality will be very important. The energy thing will change. We talk about green hydrogen, we'll talk about blue hydrogen, renewable energies, and decarbonization, and that's what is the focus area. And then how do we unlock that value from our customer? I mean, we didn't talk about sustainability in fiber and IOD. There's a lot of products. Oxiteno is a perfect fit for sustainable solutions because that's the country where they make bioethylene, because of agriculture economy. So we'll be able to make bioproducts from there. In Brazil, in fiber, we are working on many products which can, biodegradable, biocomposable. So these are the focus areas, and we added few enabling functions. Digitalization will be the future, how smart decisions you can make. So all that is a journey which we'll embark on. Lean Six Sigma, you talk about, when we talk Dennis business system. So this is an improvement journey which we are, and creating the talent bank, which is very, very critical for our organization to develop. So we want to be a proud Thai company hosting flags in different parts of the world, and continue that journey. I feel very proud when I meet Thai ambassadors in different countries and say they feel proud a Thai company having invested so much. And when we have in US, Secretary of State coming here and inviting us and saying that this is the largest Thai company investing in US, that gives us a lot of satisfaction, And so we are on a journey, I would say. And you know how Mr. Lohia is ambitious. So that ambition, and we have talent available across the world.
Yeah.
So we will keep you surprising with our quarterly results. So just wait, remain tuned,
Sure. Yeah. And then next year, I'm waiting for the next year, and then I'll see a long journey of the company, and then from very small, a few 1,000 tons capacity to become, I don't know, last year mammoth one already, right? And then you actually only Thai company that have a global presence today, really global presence. I'm talking, and I went to see your site myself in Lithuania, in US once, and then it's very amazing that you can either build a greenfield, integrate acquisition one, and then you grow and grow. I don't know, maybe you can call your company, maybe define that IBS, maybe Indorama business system or something. You mean compete with the Danaher, right? DBS,
Maybe we will write a book on how to acquire the companies. Naturally, you're right. I mean, many banks ask us, many companies ask us.
You acquire so many companies.
It's easy to acquire, but difficult to integrate.
Yeah, that's quite interesting, and probably one day I hope that you become Harvard business case. Why not, right? Because a lot of things that we can study, right, from your case. Yeah. So they become a case, and then why not your company in the future?
Absolutely, yeah.
Yeah. So okay. Today, probably I'll have to say thank you very much for all of you, for Mr. Agarwal, for Mr. Alastair, and Mr. Muthukumar, and also Mr. Vikas, and who arranged for me. And later, a lot of investors will come to see it later, because nowadays technology allow them to, come later. That's why people they on demand, say that way, on demand, right? So okay. Thank you. It's very clear today, and I'm looking for your excited and surprising, right?
Always surprise. It's always better to give a surprise than disappoint, right? So that's why we always deliberate. Should we give a guidance for next year income? And then we say it's not worth, because if that's better to keep surprising. But Suwat, thank you very much for having us on this. We really appreciate your time, and we look forward to, next further information, Vikas. Information. Yeah. Thank you.
Oh, thank you.
Thank
Thank you
you.
very much for your, particularly for Mr. Alastair and Muthukumar.
I think
because you
Suwat
guys
got frozen.
have to stay late.
Okay.
You stay
Yes,
late.
no problem at all. It was a pleasure.
Thank you.
Thank you, Kunsuat. Thank you.
Thank you. Thank you. And thank you, Mr. Alastair.
Thank you, everybody.
Thank you.
Yeah. Probably I'll see you in Texas.
Texas.
I hope so.
Thank you. Bye-bye.
Bye bye.
Bye.